This major reversal signal shows up at every single significant run that Bitcoin has gone on over the last several years. Now, it is a very strong signal and it shows up in reverse as well, pushing the market down as we saw at the peaks back in March. So today's video, I want to cover all of these low points and how this market progresses from this particular major reversal signal. We've got meme coins to get through, the traditional markets to get through after yesterday's holiday, and of course some economic data also coming your way. Off with a quick look at the meme coins for the morning before I get into the charts a little later on the meme coins. You can see there's laggards and leaders within meme coins themselves after the pump over the last 24 hours. Some of the leaders here, even over the last 7 days and few months, are Bonk, When, and Whiff. The laggards have been SHIB. Pepe has been a leader, but didn't go up as much in the last 24 hours because it's been leading for so long. But also note that Doge is not in this list, as it's been showing up as a laggard for the meme coin space. Now, also going to get into the narratives as well. Plenty of major narratives out there, but I want to have a look at some of the leading narratives and lagging narratives as well. Try and say all that stuff. Bitcoin at the peaks when most were expecting it to just continue to run higher and higher and higher, going to 80,000, 100,000. But we had the signal that showed up here. We had the 3 days down, which suggested it's probably unlikely that we're going to see higher prices or much higher prices anytime soon. And that has turned out to be exactly true. So from this top to where we currently are, 75 days underneath the old all-time high. Probably a few more to go at this point. Who knows? Maybe we blast off today to a new all-time high. But essentially 75 days, that's 2.5 months under the old all-time high. And at that top, I wrote a journal entry. Whether you believe it or not, that's your call, because of course I did not post it on this particular date. Nonetheless, what I do with the journal entries is for my own purposes here, to keep events, to learn from the events, so that I can improve my own trading and investing in the future. And as a little lesson today, I hope you guys do the same with your trading and investing. Keep a daily journal of what's going on. So I don't think this is the end of the cycle, but I did think at the top that the market probably wouldn't go any higher based on the amount of hype, and that we would see another leg up, but we needed to see some sort of major correction into wave 4. So Bitcoin has done that correction, 23%. Maybe people were looking for more. Would have been nice, but at the end of the day, we got that correction and it took quite some time compared to what we have seen over the last 6, 7, 8 months from the low in September, October. So we'll get to Bitcoin and this major reversal, but I just wanted to point out this particular reversal here at the top that is now showing up on a macro time frame at the bottom, a nice reversal signal there. Bitcoin in the short term, yesterday's bar, nice pump up, but it closed underneath that previous swing top. So in the short term, you've got higher highs and higher lows forming, but it was a bit of a weak close yesterday. So all that signals to me is that maybe there's going to be a little more time around these levels between 66 and 72. I don't think we're going to get this big rocket out of 72 yet. Maybe I'm wrong, I don't know. But essentially just looking at that weak close, it could come down to the Memorial Day that happened yesterday in that public holiday for the US, and there wasn't much trading going on, so that led to a little bit more of a push down, but probably a little more time between these levels to decide where the market wants to go from here. The numbers remain intact from yesterday's video. That's trading and investing. Things pretty much remain the same until there's a major change. So you've got an invalidation or a continuation of the trend. Our invalidation level remains at $65,000. Previous top here, another 50% level from the entire range. So yeah, basically under 65, going to be weak for Bitcoin, potentially taking a little longer to consolidate before it pushes higher. Above 65, the consolidation will be quicker than under the $65,000 level, which could then mean higher prices. In terms of accumulation or distribution, undecided at the moment because it's within this particular trading range. The breakdown, of course, well, that spells a distribution, and a breakout would be that this was all accumulation. Let's have a look at this particular signal. It shows up at the significant pumps to the upside. The white arrows are where I've got the signal. And if you guys were following the 3 days down from this top, you'll note that it comes up with the red triangles. So the red triangles to the downside, 3 in a row from significant turns. So significant turns, you can't use them within some of the choppy ranges here. It doesn't have as clear of a signal. But for now, we have a signal to the upside. You've got the low in, and you've got a green, and a green. What we can establish from the past is that it's not a 100% guarantee, because there are no 100% guarantees in trading or investing. As we know, no one knows what's on this right-hand side, the black side of the chart. I think it's always important to remind ourselves of that, and for me as well, to remind myself that no one knows what's going to happen on that side of the chart. But we just look at the probabilities from particular signals and then assess their strength so that we can then assess our risk tolerance to what is showing up on the chart. If we've got plenty of strong signals on macro turns, well, then we could say there's probably a higher chance that we're going to see higher prices before we see significantly lower prices. And therefore, I can make a trade based on that. I can decide how much I put into the market based on these stronger signals, knowing full well that it could break down, but it just seems, well, it shows that there is more chance of higher prices compared to lower prices. And the same is true in reverse. If you start to see these signals at the top, then you say, well, there's probably more chance of this thing going down, or at least pausing temporarily, if you want to call that a pause, between 74 and 56, than there is going up. So it's the same thing in reverse. Now, in terms of the signal, we have 3 green triangles or little up arrows, and then of course the red ones are down. But you can see the 3 of them here in a row. These cannot be interrupted by a red or a blue. They can be interrupted by a gray, because that just shows a lower high and higher low. So it's still within that trend, and you're going to see further upside. It doesn't matter if the bars are red. That's absolutely fine, because you still have a higher high and a higher low. That's the importance of understanding Gann analysis. This whole red and green bar, that's just set by TradingView. So we've got this signal here, 3 greens up. You'll typically get a red or a blue for a swing bottom. So that's on this Gann swing indicator itself. From there, we've got those signals on the way up. And typically you see this trend continue to rise, but what you normally do not see is a breakdown of this swing bottom. So what I'm saying here is that it's unlikely, no guarantees, but it's unlikely that this low will be broken. It could, and you'll see in some of the examples that it has done on the odd occasion, but roughly about 80–90% of the time, that low is not broken. So there's still about a 10 or 20% chance that that low is broken. But you can see that there are probabilities that that low is unlikely to be broken now. Let's go back and have a look. You've got the 3 green arrows here. Did that low get broken? No, it went on, put in another higher swing low, tested again, and then of course broke down from that point. This is on a weekly chart. So there's a lot of time between these signals, between the turns and the swing bottoms. So there is your signal, market heads up. Again, October, 1, 2, 3 greens, not interrupted, market takes off. Was this low taken out? No. That low at $26,500, not taken out. Let's go back again to the cycle bottom. When we were getting very, very bullish, and the masters out there, these pro traders were all telling us there was going to be another collapse. You can see green, 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 swing bottom back here at 16K, not taken out. This was the banking crisis, or the non-crisis, because at the end of the day, it doesn't even matter anymore. But yeah, you can see that even the banking crisis could not break this. So pretty good signs there on the way up in the bull market. Note in the bear market, you don't see this signal. There's no 3 greens. It's not like it can't happen, but it's very unlikely that you're going to see 3 greens in a row in a bear market. So yeah, it didn't happen throughout that entire bear market. Going to the previous bull market, green, green, green. Was this swing bottom broken? No, you had a higher low, another test, and then the fail. And then it was finally broken several months later. That was January, and this low here is in September. So about 3, 4, 5 months there. Going back to this one here, 3 greens happened after the blue, but the blue put in the low. So 1, 2, 3 greens. Was that swing bottom broken? No, safe signal. Market continues up. Longer term time frame here. I'm just going to point them out. Otherwise, we're going to be here all day. So here it is there. Market continues on. Was the swing bottom broken? No, you can see it go up higher. another one, another one, another one, even very, very close to the market action, did not get broken. Another one didn't get broken through here. However, here is one right here. We had the red, green, green, gray, then green. So you didn't get the 3 in a row, but you had just a little interruption. Market continued on, COVID, but then it bounced back above that level very, very quickly. So it was extreme fear. Most people did not buy that low, and then it bounces away from that point, gives you another signal right here, and then these lows weren't broken. So that now leads us over to the meme coins and the meme coin or the cryptocurrency narratives, with meme coins leading the charge here. As I posted earlier in the video here, looking at some of the leaders and the laggards. In terms of the memes, Pepe's leading the charge. 7 days here, 50% up. Dog with hat. You got Flocky up here and Bonk on the Solana ecosystem. Now, the narratives that are leading the charge, Solana ecosystem's doing relatively well overall. When we look at things that have been up, you've got Bonk on the list there. You've obviously got Solana that has been up as well. Jupe has been doing relatively well. I'm not looking at this in terms of 1 hour or 24 hours or 7 days. I'm talking longer term here with the strength on the Bitcoin charts. AI has obviously been doing relatively well, but we've seen the shift recently over to meme coins leading the charge. AI had its day when Render was up and Near was up, and you saw Tau was up. Injective was obviously a lot earlier. Fetch was up. AKT, Akash was up. Ajax obviously being on the same bandwagon as Fetch. AOs, it's had its day, and it seems like it needs to rest, as we'll have a look at on the chart. But in terms of these narratives, these are my 3 picks: memes, Solana, AI. Gaming, for whatever reason, it just doesn't necessarily show up across the board, and it continues to lag pretty hard compared to the other narratives for now. And we had that discussion late last week with Miles and how that could potentially be. Maybe it's just one big gamble towards the end of the cycle. That's just not the game that I want to play. I want to see stuff that's continuing to show strength while the market is also showing strength. Obviously with Bitcoin here, showing that strength.